Mullen Automotive has officially announced a major shift, and no, it's not a new product, it's not a surge in sales, and it's definitely not a solution to their financial problems. They're changing their company name to Bollinger Innovations. And if that sounds like a bold new direction, it's not. It's a rebrand, and in my view, it's an admission of defeat. A last-ditch move from a company that knows the Mullen brand is now toxic in the market. But wait, there's more. They also plan to change their ticker symbol before August 15th, which is notably exactly 10 trading days before their Nasdaq market cap compliance deadline of August 26th. Coincidence? Not a chance. Let's unpack this. Right now, Mullen stock is trading at around 12 cents a share, and today alone it dropped another 9%. That's over a 60% collapse in the past 2 weeks. And this is happening despite a brief rally following the name change announcement, which quickly reversed as the market saw through the move. So why change the name now? Because Mullen knows the brand is damaged beyond repair. After multiple reverse splits, ongoing dilution, questionable financing deals, and a plummeting share price, confidence in the Mullen name is gone. Investors have wised up. The market has moved on. So now, management is trying to swap the label and hope no one notices it's the same broken machine underneath. They're adopting the name of their subsidiary, Bollinger Motors, a company Mullen bailed out of receivership earlier this year by increasing its ownership to 95%. It's a brand that once had a bit of edge in the EV space, mainly known for rugged electric trucks and military-style prototypes. It never delivered at scale, but it had name recognition. And now, that name is being used to replace Mullen entirely. But here's the most suspicious part: the timing of the ticker change. The company says they'll switch the ticker before August 15th. Why is that date so important? Because back in February, Mullen was issued a Nasdaq non-compliance notice for failing to maintain a $35 million market cap for 30 consecutive trading days. To avoid being delisted, they must regain and maintain that $35 million market cap for 10 consecutive trading days before August 26th. So if they change the ticker symbol right before that period begins, it's not just a rebrand, it's a reset attempt. An effort to generate short-term buzz, confuse algorithms, and potentially trigger a temporary rise in volume and price, long enough to hit that 10-day window. This is not innovation. This is manipulation. Let's not forget what else is in motion right now. On July 8th, Mullen filed Form 14A with the SEC. That filing proposes a reverse stock split, again, ranging from 142 up to 14100, along with shareholder approval to issue stock tied to over $15 million in convertible notes and warrants. This is more dilution, more pressure, and more of the same tactics that have pushed the stock down over 99% from its highs. Then, on July 10th, Form 13G/A revealed that Esousa Group Holdings LLC, a known toxic financier, had disclosed a large stake in Mullen. Esousa is notorious in microcap circles for short-term funding plays that often leave retail investors underwater. If you're wondering what the plan is here, it looks a lot like the same plan we've seen over and over. Propose a reverse split. Issue more shares tied to debt. Try to spark attention with a rebrand or a headline. Kick the can down the road. Leave retail holding the bag. And if that wasn't enough, just last week Mullen's official website had all of its investor news and financial documents removed or inaccessible for several days. Press releases, SEC filings, investor relations, all missing. It looks like those sections are slowly being restored now, but the optics were terrible. Whether it was a technical error or something else, it happened during a period when investors were already nervous and the company was facing massive scrutiny. So, let's recap what we're seeing here. Mullen is becoming Bollinger Innovations. The ticker is changing before August 15th, which conveniently starts the 10-day compliance window before Nasdaq delisting. The stock is collapsing, down 9% today, and trading at just 12 cents. Form 14A seeks approval for a reverse split and massive dilution. Form 13G/A shows Esousa is still involved. And there's been a mysterious disruption in public transparency on the company's own website. In my view, this isn't a turnaround. This is a rebrand for survival. It's a company doing everything it can to stay listed without fixing the fundamentals. No amount of name changes, ticker swaps, or branding tricks will change the reality that this company is hemorrhaging value, lacks meaningful revenue, and continues to dilute shareholders at every turn. Retail investors should be paying close attention, not to the new name, but to the old habits. Because no matter what they call it, it's still Mullen.